Forex psychology, why 90% lose money and how to become the 10%. The hard truth is that most Forex traders blow their accounts because of their mindset, even when their strategy looks great on paper. You might be thinking, I'm rational, I don't trade emotionally. In this video, a few mirrors will be held up to your trading mind. If you recognize yourself even in one of them, you're probably walking the same path as the losing 90%, unless you start building the mindset of the winning 10% from today. Stay until the end, because there's one idea that could completely change the way you play this game. If you've been trading Forex for a little while, or even for a few years, you probably felt this. Sometimes your analysis is right, but your results are not. For most traders, the issue isn't the market or the strategy, it's what's going on in their head when they hit buy or sell. This video gets very clear on why 90% of traders lose, and more importantly, how you can train your mind to join the 10% who actually win. 3 core reasons why 90% of traders lose. Reason number 1, trading on emotion instead of a real plan. The first reason is very simple. Most traders do not have a real trading plan, and even if they do, they don't follow it. When you sit at the charts without knowing in advance where exactly you'll enter, how much you'll risk, and where you'll get out, you end up making decisions in the middle of the action. At that point, the one in charge is not you, it's fear and greed. As long as you hit the entry button based on how you feel in the moment, you're operating as a gambler, not as a trader. Reason number 2, difficulty accepting normal losses. Most traders say in theory, losses are part of the game, but in practice, every small loss shakes them, so they change the lot size and the strategy and get trapped in a loop of this system today, a new one tomorrow. And the mind that cannot calmly handle a logical planned loss will sooner or later be destroyed by an illogical oversized loss. The third reason lies in deep beliefs about money. Many people subconsciously see Forex as a shortcut to quick financial freedom. This expectation of making big money very fast puts a massive pressure on the mind. The pressure turns into oversized positions, holding on to losers, taking profits too early, and eventually the same old story of blown account. Part 2. How the top 10% think. First, they think in a series of trades, not in this one trade. Professional traders don't get attached to a single position. For them, each trade is just one sample out of hundreds that are still to come. Thinking this way reduces the emotional pressure because no single result defines their identity or their worth. And once you start viewing your performance over a long series, the urge to take revenge on the market or to make it back immediately begins to fade. Second, they fully accept the risk before clicking. Before the 10% click the entry button, they have already made peace with the worst reasonable outcome. If the stop gets hit, it won't ruin their day, it won't make them throw away their plan, and it won't put their life in question. This prior acceptance of risk makes their decisions during the trade much clearer and more controlled. Third, they set personal psychological rules. The top 10% don't only have rules for entries and exits, they have rules for their mind as well. That might sound like this. After 2 or 3 consecutive losses, I stop trading. If I'm angry, I stay out of the market. If I haven't slept well, I don't even sit down at the charts. These simple rules act like mental guardrails that stop emotions from destroying the account. Part 3. A practical exercise to move from the 90% to the 10%. Now, here's a simple but powerful exercise to start that shift. For your next 10 trades, instead of focusing on how much I will make, focus on 3 questions. Before I entered, what exactly was my plan? Did I follow that plan, or did my emotions take over halfway through? If I repeated the same type of decision 100 more times, would my account grow or blow up? Write down just these 3 questions after every single trade in your journal. After 10 trades, read them all in one sitting. You'll see the truth about your trading psychology much more clearly. Now, it's your turn. Be brutally honest with yourself. Which group do you feel you resemble more? Someone who still trades from emotion, or someone who is slowly starting to build rules of their own mind? Take one brave step. Share in the comments what your biggest psychological challenge in Forex is. For example, cutting losses, overtrading, revenge trading, or constantly changing your strategy. The comments will be reviewed, and based on the most common challenge, the next episode in this Forex Psychology series will be created. We're genuinely curious in which mirror did you see yourself in?